I'm Charlotte McLeod with investingnews.com, and here today with me is Frank Holmes, CEO and CIO of US Global Investors. Thank you so much for being here. Great to have you.
It's great to be back and gold making all-time highs, ATH.
Perfect time to be speaking with you. Really glad to be catching up. I think our last conversation was all the way back at the end of 2023, early 2024, around that time. So gold at new all-time highs. Can you give me a recap of how we got here? What's the main factor driving the gold price right now, or multiple factors?
I think there's some multiple factors. Thinking going back is that the world of 8 billion people, that there's been many elections. The biggest, most famous is going to be the US election in November, but we're looking at numbers like 5 billion out of 8 billion people have gone to the election polls this year. And there's been huge turnover of unexpected, the left in France, the left in England. So it's interesting to see those dynamics. India maintain Modi, which is a huge population. China is going to maintain as dictator. And so you're seeing these promises being made by politicians all over the world to vote for me, and I'll give you lots of freebies. And we've had geopolitics thrown into the mess. So I think it's one of those sort of classic every 4-year presidential election cycle in the US, which always punches way above its weight. It's only 4% of the world's population, but it is 25% of its GDP of the world. So it does have, in a global $100 trillion business, it is quite significant, its contribution.
Yeah, a lot of change going on in the world this year. So many countries heading to the polls. And just because you mentioned the US election that's coming up in just a couple of months now, any considerations, special things for investors to think about as they head toward the polls?
I believe there's a consultant came out with saying that the difference between in America, Democrats and Republicans, the Republicans have swung away and more traditional in the middle of being a liberal Republican. So that's how I would characterize myself as that, or a conservative Democrat. It's in the middle, whereas the Democratic Party has swung very much to the left. And that's caused a lot of controversy that you're taking tax dollars and sending them to Ukraine to defend their borders against the Russians, but we allow our borders to be wide open, and there's no checks and balances of who's coming into the country by over 1 million a month. This is sort of an irrational thought process that's very left orientation. So that just makes people unsettled in how they're looking at investing. One of the things, Charlotte, that I did last year this time is I shut down our China fund. Now, China fund, I was the first to have a China region fund back in '94. And it was a very big profit center. But what I noticed in the past 4 years is no one cared if you're number one. There's just net redemptions leaving. I also had an Eastern European fund that went from $4 million, and I seeded it in the late 90s, and it went to 1.3 billion in assets. Same thing. Americans will not take the risk of being near China or in Europe or Eastern Europe because of Russia. And so those geopolitical events, along with what's happening with Hezbollah and Hamas, they are creating this sort of social global instability. And you're seeing that some of the policies coming out of the UK, that if you are anti-Islam, then you could be arrested. But if you say anything anti-Christian, it's okay. All that stuff is really unsettling, that makes alternative assets more attractive. And I'd rather prefer always that it's rising GDP per capita, which drives the significance of art or Bitcoin or gold. But we are in this sort of interesting election cycle. And we're seeing lots of promises being made. But classic to me is the Godzilla trade happens only a few days ago, or a week ago. It felt like a few days ago. And the Godzilla trade is the Japanese yen carry trade. And this has happened many times. In '97, when I was in Hong Kong, the Japanese had been able to lend money to inexpensively to Indonesia, South Korea, Thailand, and other countries all through Southeast Asia, and they want their money back because they raised interest rates. Well, that was $250 billion, but the countries couldn't, they put their money into real estate, so they couldn't send back their buildings and barges. So they did value the country's currency. And in South Korea, they didn't want to lose space, so they asked all the citizens to give their gold, and they did, and they used the gold as collateral not to default on their currency versus Indonesia. The currency fell 70%. What was the lesson there? Well, when that happens, having gold as an asset class is really important. It seems to hold up, and it's a thing that protected to South Korea. So I think those dynamics are happening all around the world on geopolitics. The central banks are concerned regarding the money printing around the world. It's now making all-time highs, like the price of gold is making all-time highs. So all these things is just like car insurance. You want to be able to drive your car, but you better have insurance. I think it's becoming a wake-up call to a lot of people that you need these alternative asset classes like gold and silver, and then understanding the dynamics besides geopolitics, which is behind them. And that's, I remain, really bullish on gold as an asset class, silver coins. We've spoken on your program. It was only, remember, 6 months ago, we spoke, and a year ago, the premium on silver, which is in a futures price, versus actually going to a Kitco to buy the silver, was huge difference. It was deemed to be so manipulated. Some people claimed that the futures market was suppressed. The real functioning market was trying to buy silver in size, and you had to pay a higher price. So I think that we're seeing these dynamics show up, that it's just prudent to have this 10% weighting and to rebalance once a quarter, once a year, because when it starts to move, now with rates falling in the U.S., forecasted to fall, that immediately the dollar comes off because of all this left-wing political drama that's taking place, makes people skittish, and gold becomes a darling. I mean, I own gold in my luxury fund. Luxury sales are slowing down in China. Don't worry, my gold holdings, because gold, 60% of all demand for gold is for love, which is jewelry, and it shows up as having an important part of my thought process.
Yes, I think this is exactly the type of topic I was hoping that we could get into. So, talking about all this uncertainty, instability at a global scale, who is buying gold right now? We've talked, I think, quite a lot in the past about the East-West divide in terms of gold demand. Is the West starting to wake up to the fact that they probably should have some gold?
Well, I think probably one country for sure should wake up to that is Canada. They produce it. But you can see the left thought process run by the NDP is not going to do that. I think that we're seeing countries in Eastern Europe be a consistent bigger buyers of gold. We're seeing other more sophisticated global entities owning gold. I think that that's just important. I think there's too much attention paid month in, month out what China buys. China's 6-month consumption of gold is up 10% on a year-over-year basis in 6 months. Yes, but the last month was down. Everything wants to be negative about it. I really tried to tell gold investors they've got to go and think like young people do in the Bitcoin ecosystem. If the prices go down, they say, buy the dip. They say, stock your coins and hold on for dear life. HODL. You have the discipline that it's important to have these alternative asset classes and not have all this sort of negative conspiracy theories. You just buy the dip. And I think that that's what's important, that China has bought a lot of gold compared to last year, and other countries have bought gold. And if they slow down for 1 month, it doesn't bother me. It's a long-term vision. They know to protect their country's currency, to make their country's currency viable to try to compete against the US dollar. Countries like Saudi Arabia told the Chinese they need to have more gold behind their currency. So they want to have an alternative currency to the dollar. They better have more gold because their country's currency is really not that fungible. You can't, go to China with a Visa card, a MasterCard, and use it. You have to upload and convert cash into renminbi, or and then turn around and use it off your like debit card, a Chinese debit card. It's a closed ecosystem, so therefore it can't really be globally fungible like the US dollar is. But countries like Saudi Arabia have said you have to own the gold. So they're going to own the gold. I think what's really exciting is the consumption of silver. China is installing clean energy at the rate of something like, I printed about this, about 5 nuclear power stations per week, because they're trying to go into as much as possible, because their country has a lot of desert, as much as possible to use, and where there's lots of hot and cold shifting wind, is to put wind farms in and solar farms in everywhere for electricity, because every nation that really wants to become globally competitive has to invest in infrastructure, in particular energy infrastructure. And it could be gas pipelines, it could be solar panels. It doesn't really matter. The most important has been hydro dams for electricity, because electricity has changed the world in so many ways. So I think that China has this policy that of making sure that they really dominate the solar panel business. Silver is very inexpensive. I think that silver should be $100 an ounce personally, and I think that gold should be around $7,000 an ounce based on my math of money printing, etc. So I think there's lots of upside. Buy the dip.
Okay. Really good to go over that. And I'm going to come back to silver in a moment. There's a couple more things I want to ask you there. But before I go over there, I want to ask about the Fed as well. I think when we talk about factors driving the gold price, there's a lot of people watching what the Fed is going to do. And looking forward to September, it seems like we agree that there's definitely going to be a cut, but is it going to be 25 or 50 basis points? People seem a little bit divided on that. So what do you see coming from the Fed? And I guess maybe a better question, is this still important for gold right now?
Well, come on now. It's where we may be a little country of 4% of the world's population, but America punches way above its weight. It's 25% of global GDP. So it does have a big impact. If you look at the law of physics, it says force equals mass times acceleration. The mass of our global footprint on innovation technology that drive this powerful GDP is very significant. And it's a fungible currency, so it's very profound how it's used for trade all over the world. I think when we look at countries like China and India, they're 40% of the world's population. So their real big significant impact is the consumption pattern that's taking place for food or commodities out of those two nations, because they're 40%. America's 25% of GDP, predominantly because of technology and innovation. Over here, when we look at China and India, there's a different mass that drives the force. So I think you have to take a look at it from that perspective, like a quant would.
Okay. And the other question I wanted to ask you on the US economy. So are you in the camp that sees a recession coming in the US? It seems like we have shifting expectations about whether this is going to happen and even whether we might be in one right now. So where do you stand on recession?
We are in a recession.
Yeah.
And it's not showed up to the degree that everyone's expected, because the stock market's acted pretty strong. And I think a big reason for that is the liquidity. I mentioned earlier that I saw Americans would rather speculate in technology stocks in America than they would to go to Asia on fear of China, or Eastern Europe on the fear of Russia and what will take place. So you're seeing a greater speculative amount of capital going into the U.S. market. And so the stock market's acted pretty strong. But I want to jump back talking about the force equals MA model when you look at China. So China is about 20% of the world's population. So that gives a tremendous mass, like America's 25% of the world GDP. But what happens in China is they're a big manufacturing hub and exporting a product unlike India. So when we look at China, we have to look at as a big sucking engine for commodity demand because they manufacture to export back out. That's been their business model, and they built infrastructure on ports and systems and trains, et cetera, to be able to manufacture the interior and get them out to sea. So when we look at China and its PMI, Purchasing Manufacturers Index, which I write about every month, it's low. It's below 50. That's impacted commodities. And so that is another sign that America is not as big buyer, that we are in a recession to that degree, but it doesn't show up in the stock market to the degree that it normally would. But I think that's not a soft landing. That's what it's going to be. People are cautious who's going to win the election. People pull back in the spending. It's historically, friends of mine own chains of restaurants in Texas. They tell me it doesn't matter if it's a Democrat or Republican is going to win. In the 200 days before that election date, their sales start to drop. It doesn't matter if rates are rising or falling. People just start to think twice about what they're spending. And that's what we're just going to be, managing through. And I think there's some great opportunities. And when we look at different funds that I own of what's taking place. But I think for your audience, particular, the gold demand is really predicated because the U.S. is 25% of global GDP. Their rates are falling. They're the biggest trade currency in the world. Their rates are falling. That makes, therefore, gold more attractive from the feared trade that's taking place. What we really need to get is the love trade, where rising GDP per capita in China, India is rising, and rates are falling in the U.S. The demand for gold is immense then. And then we get all cylinders rising for the price of gold.
I want to check in with you on the gold stocks as well. So we've got gold at record-setting all-time highs above 2,500 an ounce. Gold stocks, are they performing as you would expect in this very high gold price environment?
Well, it's a great question because the Mr. Market out there is putting better valuations on free cash flow yield stocks. Out of the 90, just under 90 gold producers now, because there's been some mergers that are out there producing gold. That free cash flow yield went up and has declined, and I think it's sort of turning back. And we've seen that the short trade against the gold stocks is turned, and we just saw Barrick jump 9% in a day, the second biggest gold producer in the world. I mean, that's a big move for a stock like that when the daily volatility is 2% and it moves 9 in a day because they surprised the market. And I think it's not just fundamental buying coming in to buy it. I think when you get those type of spikes, it's the shorts covering their position. And I think that's pretty bullish in sort of overall capital markets. I think a lot of these gold stocks are deeply undervalued relative to tech stocks on markets like revenue multiples, EBITDA multiples, and free cash flow yields. I think that gold stocks are some of them are just so attractive. Now, what you've seen is the punitive damage happens when a company has only one asset in one country, and that country does something silly, or they have a problem on that mine. Those stocks really get crushed. They fall, 50 to 70%. So one of the things when you look at the gold producers, the cheapest stocks are single-purpose gold mines for a reason, and Mr. Market is unforgiving if something happens wrong with the asset or the country's policies. So having a diversified portfolio, and with those gold stocks that have free cash flow yield, I think there's lots of upside for them.
Right. And of course, so you have the GoAU ETF. Maybe now is a good time to review the criteria for the companies included there and what the focus is.
Well, it's a little unique in respect that it's quant driven. It recalibrates every quarter. 30% of the holdings are three biggest royalty companies, and they predominantly rebalance using mean reversion as a rule. The other 70% are looking for momentum in its production. So if gold goes up last quarter, those 5% for simplicity, then those gold stocks revenue should go up 5% or more. So we want to be where there's momentum in the revenue top line and the cash flow, and there's a free cash flow yield. So that is outperformed just buying market cap gold producers. And since we launched it, and it's still a lot of work because you have to go and do data mining on each of these assets, and 70% are looking at these various names. And as you get to smaller market cap, with that particular fund would have a smaller weighting.
Okay, really interesting and good to take a look at that. I want to go back now to silver. So you mentioned all the demand, supply, demand factors behind silver. We know that there's a big deficit there. Silver is on the move this year, but unlike gold, it's nowhere near its all-time highs. So at what point do you think we get that silver catch up? Is that a 2024 story or something beyond?
Hi ho, silver. I think a lot of it has to do with the fear trade that will all of a sudden they make it go the exponential move. And I still recommend you buy silver coins and you give those as presents for birthdays and for coming up for any holiday season because I think it trades much higher. The industrial footprint for silver is much greater than gold. For solar panels, which we talked about, the significant big buying out of China for making solar panels for alternative energy. I think will continue to grow, and I think that silver prices are truly lagging, but they still have outperformed. Gold goes up 10%, silver's going up 15%. Gold goes up 20%, silver's going to go up 30, 40%. So I would, if you're a speculator, I would speculate on silver stocks, and in particular, those names that actually hold their silver. I think that something I've learned from the crypto mining space with Hive is that it's been so important to try to show that you have your Bitcoin on your balance sheet. And I think going back in the 90s, we saw companies like Rob McEwen, when he had Gold Corp, he hodled his gold because it was too cheap to sell, and his stock price had the highest price to book. IM Gold did the same. So I think that some of these gold producers, if they want to all of a sudden attract a bigger audience of investors, the board members and the executive have got to take a look at some of that, consider some of that free cash flow, because gold is just too cheap to sell 100% today.
I think that makes a lot of sense. And as we're starting to wrap up, so we got your long-term gold and silver price outlook for, I think, this cycle. So you'd mentioned $100 silver, gold, maybe 7,000. But like you were mentioning earlier, there is this negativity, this pessimism in, I think, the precious metals space. So what are some near-term targets that we can look toward for those metals?
There's just the math of rates falling, and will they go negative will give you a bigger price swing in gold. So I think $3,000 is pretty simple over the next 12 months. It would be a non-event. 4,000, it would fit into what I forecasted 5 years ago, where I think gold would be going is to about 4,000. But I think that another $500 move, it would just be the normal course, because we're seeing global money printing turning up the press for all these election commitments.
Definitely feels very attainable, those levels at the moment. So before I let you go, any final thoughts that you would share with investors, any other areas of opportunity that you would mention?
Yeah, just stay positive. We're much more transparent in these other economies like China and Russia and Iran. It's very much a closed system, a closed economy, and nothing has worked better than our transparent accountability, responsibility, and free markets. So support that and recognize a big part of the success of a traditional liberal mindset towards capitalism has been positive. A positive mindset allows you to capture opportunities better and faster.
Okay, really good to wrap it up on a positive note. Thank you so much for coming on to share your thoughts on gold and silver and what's going on in the world. Really good to have you.
Thank you. It was lovely chatting with you.
Of course, and once again, I'm Charlotte McLeod with investingnews.com, and this is Frank Holmes with US Global Investors. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.